A deposit in a commercial lease is similar to a deposit for a residential apartment. It's money held by the landlord as security in the event of the tenant's default. It adds cost and decreases flexibility. Here are the key things to know when negotiating a deposit. There is a wide variation in the size of the deposit the landlord might require. Companies with strong credit can often insist on no deposit. However, companies with very weak credit might have to give the landlord a deposit equal to 1 year of rent, and in some cases even more than that. Because your financial strength is so important to the landlord, be prepared to share at least 2 years of financial statements, including the income statement, balance sheet, and statement of cash flows. Also be aware that savvy landlords will insist that the entity signing the lease is the same one on the financial statements. Sometimes tenants will submit the parent company's financials for a lease that will actually be signed by a subsidiary. Most landlords won't allow that, insisting that either the parent company sign or at least guarantee the lease on behalf of the subsidiary. But it's not all about your credit. The landlord's investment also matters. When I say investment, I'm referring to the build-out of the space. So it would be either the TI allowance or, in the case of a turnkey build-out paid for entirely by the landlord, the total cost of that build-out. The more the landlord invests in the space, the riskier the deal is, which in turn can require a higher deposit. If you don't want to use cash, most landlords will accept a letter of credit. Consult with your finance team on the pros and cons of each. If you're forced to give a large deposit, you can sometimes negotiate something called a burn down, in which portions of the deposit are returned if certain milestones are achieved. Let's say, for example, the landlord requires a deposit equal to 6 months' rent. You might be able to negotiate having some of that deposit returned after you've established that you make your rental payments on time. For example, 1 month of deposit returned for every 1 year of on-time lease payments. The logic being that you've proved that you're a low-risk tenant and therefore a large deposit is unnecessary. Burn down is a good way to find a middle ground if you're having trouble coming to an agreement with the landlord about the size of the deposit. Sometimes people ask about the interest that gets earned on the deposit. The answer is simple: it belongs to the landlord. You can certainly attempt to negotiate the right to keep the interest, but it's not common, and considering that it's a relatively small amount of money, it's usually not a battle worth fighting. Finally, be ready to share your financial information with the landlord. As I mentioned earlier, this is a key component in determining the appropriate deposit. If you're concerned about confidentiality, most landlords will be willing to sign a non-disclosure agreement.